From Tesla's ethical failures to AI's energy addiction, is your KiwiSaver as ethical as you think? We break down the foundations of ethical investing, expose greenwashing, and uncover what it truly means to invest with impact. A big thank you to today's sponsor, Pathfinder.
We are back in your life. If you cast your mind back to February, we did a KiwiSaver episode where we talked about the new big dog in town according to the quarterly Morningstar report, where we talked about Pathfinder. And Pathfinder, whose ethical growth fund outperformed the market 5-year return, sitting at number 1. Today, we're joined by John Berry, the co-founder and CEO of Pathfinder. John, welcome to the podcast.
Great to be here. Thank you.
So, John, I'm excited about this one because a lot of clients ask us about socially responsible, ethical investing. What do all of these things mean? Do I have to give up returns to be able to invest based on my values? Maybe if we start with responsible investing versus ethical, what is the difference?
Look, I know it's confusing for investors, all these different terms used by the industry. Ethical investing is leading with values. So yes, we're still there to make as much money as we possibly can for our investors, but ethical investing is putting a values overlay of what you don't invest in or what you do choose to invest in. Responsible investing is a different approach. Responsible investing is essentially assessing risk in a business by looking beyond the balance sheet. And for example, if we give the example of human rights, so a responsible investor would look at a company and say, do they have child labor in the supply chain? And they wouldn't look at it through the lens of, because we don't want to have, children working in the supply chain. They would look at it through the risk of, because if there is human rights abuses in the supply chain, there'll be reputation and brand implications, which will reduce the share price of the company. So the ethical investor would say, we don't want human rights abuses in the supply chain because it's just the wrong thing, the wrong company to invest in. Nike is a great example. In the 1990s, Nike was found to have children working in the supply chain. The company almost collapsed, share price collapsed. So an ethical investor would say, I just don't want human rights abuses. It's a values decision for me.
How does that impact the decision making? Because if I look with responsible investing and I go, I don't want to be fined, so I'm going to stay away from that company. At the end of the day, that's still good because it means that company's not receiving money. I know the common examples I'd heard in the past was like VW, like with faking their emissions, BP with the oil spill off the Gulf of Mexico back a while ago. But with responsible investing, the outcome is the same, right? Like you're not investing into that company. So how does it actually impact where the money goes?
How does it impact? So, for example, weapons. Like an ethical investor could say, I don't want to be invested in the weapons industry. I don't want to be funding harm in another part of the world. I don't want to invest in fossil fuels or companies that test perfumes or consumer goods on animals. Those are ethical decisions. There's no sort of financial reason for making those decisions. It's purely a values-based. So there is an intersection between the responsible investor and the ethical investor in that you're using human rights, how you look after staff, all those sort of metrics, non-financial metrics to make your decisions. But ethical investing puts this overlay of values on top.
Yeah, and how hard is that to do for an analyst, to look beyond the balance sheet? Because, your quarterly reports, your annual reports, they are public, for most companies that you're investing in, you can get that and assess it. How do people actually look beyond the balance sheet and go, okay, do they have child labor? What is their attitude towards, pollution or global warming? Like, is it boots on the ground or how does that work?
Yeah, look, it is complicated. It's more than just financial metrics.
Yeah.
So we're getting data on a universe of thousands of companies. Do they have a human rights policy? How do they treat their staff? What are their policies and procedures around how they look after their staff? What is their governance structure? And we feed those into our investment process. And there's a human overlay as well. We have an ethics committee. So there's 5 of us on the ethics committee. There's these huge grey areas of, even defining what was not a weapon, for example, is quite complicated.
Yeah.
And there's all these grey areas you've got to navigate. And you've also got companies that their supply chain may be troubled in terms of their extracting rare earths, but they're also leading in decarbonisation, and you've got these trade-offs as well. You've got to navigate.
We definitely had a bit of trouble when we were trying to classify if James was a weapon.
Definitely
I'm not sure where we
weapon.
landed on that.
100% a weapon. Watch out. I want to come back to the grey area component because I think that's a really big one. So when I think about, say, not investing into gambling and going, I'm not going to invest into Sky Casino, right? But then there's the example of, well, if you've got the machines, the pokey machines, do you invest into the company that does the electronics or the glass, or what about
like the touchscreen stuff?
Yeah,
and the components
for sure.
Yeah.
Or like, what about like, say, white bread versus whole grain bread? It's such a spectrum. All three of us will have different perspectives on what is ethical and what is not ethical. White bread.
If it's got like baked beans, toast. White bread is toast, right?
Yeah, making kids fat. Not good. Where is that? Because we're all going to have different perspectives on what's okay and what's not okay. How the hell does an ethical committee decide on that?
Yeah, look, you're absolutely right. Its values are very individual. So we've got over 11,000 members in our KiwiSaver. If I had a conversation with each of them, everyone would have slightly different nuances in what they want and they have a different value set, but we can only come up with one. So what we did as a team was we thought about what is the world we want in 50 or 100 years? What does that world look like? How do we describe it? What does it mean for resource use, for equality, for human rights? How do we invest now to bring about that world? And so, yes, you're right. It's tough in that everyone has a different opinion, but it's essentially guided by people, planet, and animals. This future state we want to create. How can we invest to bring that about? And there is no, I'm not pretending there's a right answer to every question. And often the world is complicated. The world changes at a fast pace, and often you're balancing different metrics or competing interests, but you've got to make a decision. The key thing is about being transparent. Is about explaining to investors, here's our approach, here's what we're investing. We have a list on our website we call the Companies of Concern register of companies we've been looking at in the last 12 months that have issues that we've considered. We also have an exceptions register. Occasionally, we will say, for example, the company's work may be so transformational that we must invest in it, even though technically it may breach our policy. An example I'd give there is there's a company in Australia, Polinovo, that has made artificial skin. And so we don't invest in animal products or animal testing, but their products will actually do away with animal testing in the future by using synthetic skin. So we can, on occasion, grant exception because their work is so transformational.
Right, that's interesting. And tell us about other industries that you're seeing at the moment in that ethical space that are interesting.
So with the portfolio created by an ethical investor, will kind of look the same in terms of industries as what you'd see with conventional portfolio. We still have energy companies. We just don't have
coal-fired.
We've got Contact Energy, which has a small amount of coal-fired through Huntley, but that's all. No other fossil fuel in our energy resources, more focused on renewables. We've still got water companies. We've got tech companies. We've got banks. We don't have banks, the largest banks that fund fossil fuel companies, but that still leaves a whole universe of banks you can invest in. So, we still have the same spread across industries. We just will avoid your weapons, your animal testing, your fossil fuel companies. But it's still, if there's a universe of 5,000 companies we could invest in, our exclusions take out about 30% of that. That still leaves you more than 3,500 companies. We're looking to build a portfolio of 200 companies. So even though you're knocking out, a good percentage of the global market, there's still this large universe to choose from.
It must be a fascinating space to invest in with the ethical stuff. Like when you're using the example of, a company creating artificial skin, almost by, well, not by design, but the path that you've gone down with the ethical investing will lead you to some really interesting investments around people trying to change the future from the path we're on.
Yeah, absolutely. And we invest in a number of New Zealand companies that are not on the stock exchange. So they're private companies. They're often quite mission focused, quite purpose focused. They're there to make money for their shareholders, but they're also there to solve a real world problem. And so we've got like Lodestone Energy. You don't think of New Zealand as a place for solar energy. They are building solar farms to provide between 2 and 3% of New Zealand's energy. So Lodestone Woolaid makes biodegradable Band-Aids. We gave them funding to help them launch into the US. Mint Innovation. So we don't invest in mining companies, but we invest in this great New Zealand company called Mint, whose technology takes e-waste and extracts metals from it, which is incredible, right?
Yeah.
Mentamere, or now called Groove, which is a mental health app, and also Positive Property. We've funded 4 social housing transactions that are still profitable for our investors, but are providing warm, dry housing for people in New Zealand who really need it.
I want to talk about the word profit. Do you see red flags when you're talking to founders and companies where they're almost too mission driven and not focused enough on the bottom line or how they get to a bottom line?
Yeah, look, if you think of, there's a scale of sort of philanthropy through to short-term capitalism, we're somewhere in the middle of that. We're still focusing on ethical companies, on wanting to have a positive impact on the world, but it's not philanthropy. Like we're investing money, we're managing money in our KiwiSaver for our investors. This is their retirement money, and that's a lot of responsibility. We still have to make them, a good return.
Yeah.
So it's, to your question, I don't have a problem with social enterprises or philanthropic type enterprises, but that's not where we can put our money, because we still have to generate that return for our investors.
Yeah. And then on the return, there's always this assumption that when you go ethical or green, you lose performance, right? Think about the Toyota Prius. Everyone's like, you think of a Prius and you go, oh, it's a little bit slow, it doesn't perform. How's the performance of the ethical funds?
Yeah, look, you're absolutely right. The assumption of a lot of people is it's binary. I can have one or I can have the other. Our mission at Pathfinder is to generate individual wealth and collective well-being by investing ethically. So we talk about duality of making money and positive impact on the world. And I think the data is really clear. You can look at Morningstar reports, you can look at the Mindful Money website. The research and data shows the returns are at least as good from ethical investing. And intuitively, it kind of makes sense. So if you invest in a company where the leadership care about their staff, that company's actually going to be more productive. It's going to have fewer sick days, lower staff turnover. They're going to be more profitable. And it's because, their leadership is great leadership.
Yeah. I want to switch to, I think I don't want to, maybe not greenwashing, but when it comes to, I guess the barrier for regulation and KiwiSaver providers going, we are ethical or we're not ethical. The FMA, your regulatory body, when you make those statements around ethical and maybe what other providers may or may not say, what do those discussions look like?
So the FMA, or the Financial Markets Authority, is the regulator in New Zealand of the financial services industry. Their job is to ensure integrity in the industry. And the key responsibility is for providers not to mislead. And full disclosure, we've had a couple of ads in the past where we should have done better. And it's hard in an ad to bring in all the nuance of the ethical investing approach. But one of the challenges, the different terminology used in the industry, the key responsibility on providers is transparency of what they're actually doing. So I'd encourage people to look on a provider's website. Do they make it easy to understand what they mean by ethical or responsible? Because if they don't make it easy to understand, then they're not prioritizing that as important. And, what is that approach? Because there are close to 40 different KiwiSaver providers. Everyone has a different approach. And that's a good thing for consumers, because that means you've got choice on the ethical or responsible approach they're taking. But you need to actually dig in a little bit into the approach that managers taking.
Yeah, I love that idea of if it's opaque, maybe it's not quite what it's meant to be.
Yeah, look, you're right. Ambiguity,
and that's finance,
language.
Right? That is everything in the finance industry was opaque by design, and the transparency piece I actually really enjoy.
Yeah. No, and you're right. And it's not just a financial services issue. It's across all marketing for products to consumers should be clear, and it should be unambiguous on what you're achieving without sort of lofty promises or ambiguity. And if ambiguity in the industry, the word sustainable is one I find really troubling, because to most people, sustainable means the future of the planet. How can we be circular economy and develop a better future for our children? A lot of people in the finance industry see the word sustainable as cash flows in the future, consistent cash flows. The cash flows are sustainable.
Yeah, a slight misalignment there.
I like sustainable cash flows.
You've got to be really careful with terminology. In the industry, the word sustainable has this ambiguity around it, which I think is really unhelpful for investors.
What I'm keen to jump into now is the due diligence process when it comes to ethical, because I'm sure when you start to look at companies, it gets quite complicated. There are those who say that, they represent these values, but maybe once you get into it, it's not quite the same story. So we're going to get into that after the break.
The Pathfinder KiwiSaver plan is all about doing things differently. They seek to exclude certain activities like fossil fuel extractions, weapons manufacturing, and vapes.
Yeah, they use ethical principles to hunt out better opportunities. Think green bonds for climate solutions or private investments in e-waste technology. They've been investing for over 14 years, and the Pathfinder KiwiSaver plan is over 5 years old, meaning Pathfinder was investing ethically before it was cool.
I don't know if you know this, mate, but Pathfinder's KiwiSaver plan has won Mindful Money's Best Ethical KiwiSaver Award 4 years in a row. Pretty big deal, mate.
I know they are. When it comes to returns, Pathfinder's KiwiSaver funds have frequently outperformed the benchmark. You can learn more about Pathfinder and their fund's performance in the show notes below. Pathfinder Asset Management Limited is the issuer of the Pathfinder KiwiSaver plan and Pathfinder investment funds. Product disclosure statements for the offers are available at pathfinder.kiwi. Learn more about how they invest ethically by reading their ethical investment policy on their website, www.pathfinder.kiwi. Now, back to the episode.
So, due diligence process. Surely there are some companies that are on the naughty list that maybe you were invested in or now you're not, or you went through the due diligence and thought, maybe that's not for us. Give us the tea. What do you got?
Yeah, so look, we're constantly learning about the companies we invest in, and companies change as well and start new business areas or operations. So we might find, for example, a bank that we're happy with, suddenly we find it has huge lending to the coal industry, so that becomes uninvestable, and we would get rid of it if we found that out. There are companies like United Healthcare in the US, which we're invested in, and then we found there were allegations of them misleading around patient diagnosis so they could charge more money. Unethical behavior. There's Facebook and VW, obvious examples of VW with their emissions testing, Facebook with Cambridge Analytica. Like, we haven't invested in those companies since then. Companies we might find have weapons, revenue from weapons. One company we were invested in, which was essentially a training company, and it used simulators to train in healthcare and train surgeons and to train pilots. We actually found they were a massive chunk of their revenue was actually training military pilots. So not technically a weapon, but doesn't really align with our trying to avoid weapons. So we sold that company. So, it's tough because typically the companies have global operations and they'll be doing more than one thing. They're doing a bunch of things. They're not always out there to explain to you what the nasty stuff is that they're involved in. There may be lack of transparency around that. So we have to dig down and really find what the companies are doing. And we can change our mind. We can change our mind when we get this new information.
And I guess when it comes to those bigger companies, they're probably more like, take us or leave us. But when it comes to the new, like maybe the smaller companies, that kind of private equity that you're investing into, what are those conversations like when maybe there is something new that suddenly doesn't align with your values? How does it go?
Yeah, great point around engaging with companies. Like, as a New Zealand fund manager, we don't for a second believe we can change global European or US corporates. So we just don't invest if they're not aligned with us. In Australia, New Zealand, we can actually have access to CEOs, we can have access to senior management and have those conversations. So if there's something that's unclear or something we are concerned about, we can have a conversation with them on what we expect from them or question them on what their plans are.
Has there been any cases where you flagged, hey, this looks like it's going a bit away from our values, and they've gone, good shout, we weren't, I don't know if aware is the right word, but they've kind of come back to where you want to be? Have there been examples like that?
Yeah, look, there's one business, one listed company where they grow things, they grow food. And when we read their sustainability report and all their reporting and their management reporting, they never talked about climate change. And we're saying to them, like, you're growing stuff, like the biggest risk to your business should be around climate and wet parts of the globe getting wetter, dry parts getting drier. And they said fair call, and 18 months later, we could see that in their public reporting was being taken into account. So sometimes it's just giving companies a nudge.
So, John, I want to jump into a little bit around like the greenwashing in companies. Obviously, they want a good public perception. Nike, they kind of push back a lot on kind of what their working conditions look like. Apple's quite similar. And then Tesla's probably quite a confusing example as well, because they're, moving towards electric vehicles, but then there's a lot of questions around the batteries and the impact on. Could you talk to us a little bit along those lines?
Yeah, James, Tesla's a great example. So if you think of environmental, social, and governance issues, Tesla with the environmental issues, where are the rare earths coming from and what are the environmental challenges around that? Social issues, what is the supply chain? How are people treated in the supply chain? Tesla is anti-union. That's a human rights issue as well. Governance, there are totally governance issues with the way Tesla's operated. And this actually went to our ethics committee recently. We've got a blog on our website explaining our reasoning around it, but we don't invest in Tesla anymore. And part of it is debating these issues, and then also the investment team saying, actually not sure the valuation is at the right level at the moment. So you've got to put Tesla is more than a car company. It's a data company. It's a driverless car potential company, battery technology, but the share price may have got away on it. So we sold that through the first quarter of this year. And it was kind of the debate around environmental, social, and governance issues, the CEO behaving kind of weirdly at times, and also the financial metrics as well.
Yeah, I think that's kind of, Tesla's a really interesting case because like you say, it's so popular with investors out there in the market, and the numbers reflect that in the share price, but it's almost totally divorced. The share price is almost totally divorced from any underlying factor about the company, right? Like, even the number of sales of the cars and the size of the company, you look at it and you go, is it just hype? Like, surely.
Yeah.
I think the other interesting thing with Tesla is the reason we bought it as an ethical investor was Elon Musk at the time was leading decarbonisation and electrification of not just cars, but transport. And that story has kind of run its course now. The rest of the industry is caught up. So that imperative to hold it for that leadership and decarbonisation is kind of gone. It now has to stand on its own feet as with environmental and social metrics and also the financial metrics. But you're right, it's a tough one to value.
Yeah, 100%.
John, what about AI? I'd be keen to get your thoughts, and maybe when you're talking, this ethical committee, AI is quite an interesting one in terms of the uses in the future. How do you think about AI from a ethical and socially responsible perspective?
So 2 ways we can think about AI. One is, how is it going to be a tool for making better decisions as an investment manager? And the other is, how are companies going to use it? The companies we invest in going to use it. The thing that particularly concerns me around AI is the weaponization of AI and AI becoming an integral part of weapon systems. AI intruding on people's privacy from it. So there's a lot to think about there, and that's something we've marked as we need to consider this in depth this year because this is evolving so fast. As a business, one thing I sort of think through is, could AI, on our ethics committee, could AI be a useful additional voice on his different ways of thinking about the ethics of a company? But there's something kind of weird about using AI for ethics, right? That's a kind of crazy world, but that possibly is the future we're looking at. AI could be an absolute game changer for business and how decision making happens. I'm kind of reluctant as a human to hand ethical decisions over to AI, but it's certainly going to change. It's going to disrupt entire industries. It's going to disrupt the companies we're investing in.
Yeah, I know at the moment they've got quite an issue with the amount of electricity and power and energy that it's using, right? And I think a stat on it the other day, people saying thank you and please to ChatGPT is costing them $10 billion a year in electricity or some ridiculous stat like that, because it's just one more thing it has to process.
Absolutely. The rule of thumb is that a ChatGPT or Perplexity AI search uses 10 times the energy of a Google search. And then, like you say, the processing of the answer for AI is more complicated if you say please and thank you. So it's even more energy as well. So you're trying to be a good human and being polite to AI. I know. You're actually, the energy use goes up, which is not great for the planet. But one stat I saw was half the people who say please and thank you half people do that because they are just polite people. There's also 10% of people that in the back of their mind, they're thinking AI may one day take over the world.
Oh, yeah.
And it's going to know how I've treated AI in the past. I'm going to say please and thank you. I'm going to respect it because I want to be respected when AI takes over.
James.
My pitch is let me be head of the humans. I will report to you. So, I mean, when we think about the power impact on and the energy side for AI, that would make me think that Pathfinder would go, well, we can't go near these companies because they're having a negative impact on the planet.
Yeah, I think as individuals, we need to take some responsibility and use Google when Google's appropriate and use AI when AI is appropriate. So don't just go straight to an AI search to reduce energy use. Where it comes, what we need is these massive data centers, which are incredibly energy hungry. So what we're looking at is data center providers, do they have a focus on renewable energy?
You're on the ground talking to all of these cool New Zealand companies. How do you feel about the future of New Zealand?
Well, in terms of cool companies, there is so many incredible ideas, incredible innovators and entrepreneurs in New Zealand. Like we have this amazing depth of talent, and capital is often really hard for them to raise in New Zealand, which makes them laser focused on solving a problem without spending too much. Too much. They're not getting huge amounts of money thrown at them, and they're really focused on solutions. Like I'm really positive around if we encourage and nurture these businesses, the wealth it could create for New Zealand, the jobs it can create for future generations, and the prosperity it can create as a country, which ultimately was reflected in our KiwiSaver savings. Huge opportunity. Like I'm positive long-term about New Zealand. You're right. People have been a bit down on where we are, and cost of living crisis is tough, and the lack of growth in the economy is tough. But I see the long-term future as really positive. We're actually a part of the world that people really want to live in.
I think that kind of lean startup approach, because the capital isn't so freely available, is actually a competitive advantage for some of the startup companies in New Zealand. That might be quite an annoying thing to hear if you're a startup founder and listening to me say that. But it's that opposite of kind of SoftBank capital as a strategy. Where you just pick a company, pick an idea, throw as much money as you can at them and hope that they win. And I think we saw that didn't work. The negative externalities of that are huge, both for investors, for the companies, for the employees, for the customers, for everyone.
Yeah. No, you're right. It's an entrepreneur is not going to thank us for saying it's actually an asset to not have capital thrown at you. Yeah. But the reality is it just makes people think smarter and innovate and achieve. It's like Rocket Lab. That was a New Zealand creation and much cheaper way of accessing space.
Yeah, coming back to the New Zealand piece, John, I mean, as those KiwiSaver balances grow and there's more capital in New Zealand within these KiwiSaver funds, I mean, there's a lot of, say the government will talk about, we want to find overseas investors to try and, whether it's building toll roads or whatever it might be, to try and make New Zealand a better place, better infrastructure. Does Pathfinder think about how, obviously to generate a profit, but how they can also, you've got capital to deploy, how you can make New Zealand a better place outside of maybe just those startups? Yeah,
look, we're not the only KiwiSaver provider that's saying to the government, you need to make opportunities available which are investable for our investors and would provide infrastructure for New Zealand that we can't otherwise afford.
Yeah.
So KiwiSaver is about $115 billion. Like, it's massive. Imagine if 2, 3, 4% of that was invested in improving infrastructure in New Zealand. It needs to be profitable because KiwiSaver is long-term savings for New Zealanders. But imagine if you had that profitability and also providing solutions that we need around infrastructure, around renewable energy. It could create an incredible future for New Zealand. Yeah. We've got this capital we need to unlock.
I mean, you think you just have to look at Australia, right?
Yeah.
And their contributions to their Australian super, much higher level of contribution, been going a lot longer, and where they're sitting at the moment.
And the wealth difference. Between Australia and New Zealand, I take the mining out of it because they don't get any of the wealth from that. It's their superannuation. That is why they feel richer.
I think one of the challenges for New Zealand is we're stuck in this 3-year election cycle. We actually need to think of KiwiSaver as a decade or more. And we need to say, no one wants to put in contributions up because at the moment, cost of living crisis, really hard for salary people to put any more in. But employers, we could signal in 2 years, we're going to increase the contribution from 3 to 3.5%. In 4 years, we're going to increase it from 3.5% to 4%. Just get a 10-year plan in place where we start building KiwiSaver contributions. In Australia, it's above 10% for the employer. Like over a decade or 15 years, we could have a plan to get ourselves to 10%. And that would be to step it out so it's manageable for employers, but super meaningful for people in their retirement.
Yeah, 100%.
Couldn't agree more.
Yeah.
Like the same as having an infrastructure fund, right? You're taking these things away from politicians that are trying to win an election and going, what is right for New Zealand over a much longer period of time?
Yeah. And the infrastructure story as well is every generation has an obligation to improve New Zealand. Like generations before us built water infrastructure, energy infrastructure. We need to be doing that as well. And every generation adds to the infrastructure and just makes New Zealand a better, more modern, more prosperous country.
Yeah, absolutely.
Awesome. So John, I mean, we've been talking a lot about ethical investing, all of these, what to look for, red flags, etc. For those that are listening and going, my KiwiSaver, I actually have no idea how responsible or ethical, where should people start? How do they start to inform themselves on exactly what they're investing into?
So first thing I'd say is have a look at your provider's website. Have a look, do they have an ethical or responsible investment policy? Have a look at their holdings. Are they happy putting a list of holdings there, and you can go through and see what you think of the companies. Secondly, I'll go to mindfulmoney.nz. Mindful Money gives a list of, for your KiwiSaver, will give a list of environmental issues, human rights issues, weapons you're invested in, animal testing, and you can decide what you care or don't care about, but it will give you that level of transparency. You can go to a website, Responsible Investment Association of Australasia, quite a mouthful, RIA, RIAA. Have a look at their website. They have a certification process for managers around responsible and ethical investing, and check out the Pathfinder website, see how we compare.
Nice. Okay, John, just to conclude, where do you see the future of ethical investing and how does it play a part in KiwiSavers?
So I think over time, people are understanding that money is more than just a tool for buying things, for investing in things. Money, yes, money is that tool, but it is also essentially a vote on the future world you want. So conscious consumerism, you can buy product with less packaging. You can buy low carbon electricity. With investing, it's the same choice. How do you want to invest your money to create a future world that you're happy with? So I think for the future, I think more people are going to become aware of that. It's going to become much more mainstream. There's going to be a focus shift, I think, around, at the moment, it's a lot of climate focus in the way you invest. That's going to move into biodiversity. It's going to be much broader in the environmental sense. How are companies we invest in impacting on water resource, on ecosystems and biodiversity within ecosystems? And I think in future as well, I'd like to think the labelling will become clearer and that there's terminology everyone can understand. The industry uses standard terminology, wonderful transparency for investors, and also more product options.
Yeah. I do have one more for you. At breakfast, I heard that 70% of your clients are female. Is that right?
You're close to 70%.
That's an interesting stat, isn't it?
It's super interesting. And as a guy, it's hard to explain. So my mission is to get more guys motivated around investing. And I don't want to be controversial, but I wonder if a lot of guys think you can't have returns and be ethical at the same time. And that's on me to try and bust that myth through the data, prove you can actually get great returns.
Awesome. John, thank you very much for your time. I mean, this has been one that I've been wanting to do for a while in that socially responsible space. So really, really interesting insights.
Awesome. Thank you, guys. Appreciate being here.
Cool. So if you've been thinking about your KiwiSaver and going, is it socially responsible? What am I meant to be doing? Go out there and have a look and go kind of, what should I do? Check out the Pathfinder website. Much love to Pathfinder for sponsoring this episode. Please subscribe to the podcast. Give us a like, give us a review, and we'll catch you next time.
Cheers.